Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about Palantir Technologies PLTR stock and how it got a recent price target upgrade from a Morgan Stanley analyst that sees around 46% upside potential in the PLTR stock for the next 12 months, which is fantastic news. Palantir has had a lot of good and bad news lately, so it's good to see another good news segment coming out about Palantir Technologies. If you didn't know, Palantir Technologies, ticker symbol PLTR, currently trades for around $11.40. The 12-month analyst price target for the stock, according to professionals, is $9 per share, so there is still slight downside to the PLTR stock. However, the average analyst price prediction for the company goes all the way to $15.94 for the next 12 months, while the high-end price target ranges anywhere from $20 to $25.30 per share. Now, with that being said, Morningstar actually has a fair value price evaluation for Palantir Technologies that goes up to $31, mainly based off of their competitive advantage and their overall moat between their government business as well as their commercial customers. Right now, about 10 analysts cover PLTR stock, with one of them saying that Palantir is a fantastic buying opportunity right now. 5 of these analysts actually say to hold Palantir Technologies until the years of 2024 or 2025, because that's when we think that Palantir will experience the most growth in their stock price, and then 4 analysts actually say to sell the PLTR stock because they think that the current opportunity cost could be better off in another stock company or even an ETF. So that's currently what the majority of analysts think about this company, but what does this company do? If you didn't know, Palantir Technologies is a big data and analytics company that serves both government agencies as well as commercial enterprises, and they are very diversified in both of these various business segments, and like I have been saying for many months now, I personally believe that their commercial revenues and their commercial segment will be the thing that moves them into a profitable company, mainly because of how rapidly it's growing and expanding. Eventually, their commercial clients will eclipse their revenues for their government contracts, which currently brings in the majority of their revenues. However, in the future, I think that their commercial revenues will be making them more money than their government side, which will lead them to profitability. However, let's see what this Morgan Stanley analyst says about Palantir Technologies and why he has upgraded his personal price target. Well, recently the PLTR stock price has actually surged by 5% based off of this news, which is not too bad. The Morgan Stanley analyst actually says that this price upgrade is mainly due to how Palantir is facilitating and actually following up on their plans and goals, which means that the company's fundamentals are intact and that their business model is working. The specific Morgan Stanley analyst that we're going to be following today is named Keith Weiss, which has raised his price target all the way up to $16 per share, which implies around a 46% upside from the stock's current stock price. And the reason why this is very good, bullish, and positive news is because, like we saw earlier, the average stock price target is around $15.94, and this barely just beats out on that particular price target, which is good news for investors. It's always fantastic news to see analysts, specifically analysts from very well-known institutions such as Morgan Stanley, upgrading their price targets on this particular company. Another reason why this analyst decided to increase his price target for Palantir Technologies is because they have better visibility on their future contracts with US customers as well as federal government customers across the world, and this is going to yield very strong benefits for the overall company. Now, clearly this analyst is taking a different perspective than what I am taking. Again, I only like their government segment because it gives them steady revenues despite what the current market environment is, and this is one of the things that has caused this particular analyst to raise his price target. However, I think if you also incorporate their growth of their commercial enterprise, that the price target should be above $16. But let's see what else he says about why he decided to increase his price target to $16. He says that the operating margins have rose from a loss of around 45% in 2019 to a growth rate of around 31% in 2020, and this means that the company is improving very rapidly and it's firing on all 4 cylinders. The company also plans to cut expenses and increase their overall revenues, which they have done periodically quarter over quarter. And while we see these increases and this fantastic news from the company, analysts can't help but increase their price targets. I think in the future we could see more analysts increasing their price targets for Palantir Technologies as they continue to scale their free cash flows, because any analyst that is using the DCF model, like we have done many times on this channel to calculate Palantir's and many other stocks' price targets, will be forced to increase their price targets, which I have talked about in a previous video, and now we see that actually coming true in this video. Now, although this is fantastic news for Palantir Technologies, a gain of around 3 to 5% today is not something to be overly bullish about, because over the past 6 months, Palantir Technologies has actually fallen almost around 60% in price. So there are risks for this particular company, which is why we wouldn't want to over allocate ourselves just to a single company. There are plenty of good stocks on sale right now that you should buy because they are at a fantastic discount. The analyst goes on to say that his overall concerns are outweighed by the positive reward from the PLTR stock and fundamentally what the company offers. He says that Palantir Technologies is adequately priced, and this is going to benefit them towards the neutral to positive territory, which means that the PLTR stock price does have good potential upsides, which could pay investors very heavily. This is also coming on the tails of Palantir's new partnership that they signed with Jacobs Engineering Group, which I also did a video on, and that's basically just to transform their water treatment facilities. Now, I also want to add that this analyst is not alone. A lot of other institutions are also taking a second look at Palantir Technologies right now. Specifically, many other institutions actually think that the PLTR stock looks rather oversold right now, so let's take a consensus based on their revenues. Right now, the PLTR stock trades at around 11 times their consensus revenues for 2022. Now, ideally, we would want this PS multiple to be below 10. We really don't want to see a double-digit PS multiple for growth stocks based on this current market environment, because if you've looked at the stock market recently, the majority of stocks have been trending down lately due to macroeconomic factors such as rising inflation rates, the conflict between Russia and Ukraine, investors moving their money out of the stock market and into the bond market, as well as other investors liquidating growth stocks just to invest into value stocks. However, while the stock market is falling, I view this as a fantastic buying opportunity to double down on my high conviction plays, especially investing into ETFs such as VOO and VTI. I did a previous stock market video on this maybe 2 videos ago that also predicted that the ETF for wheat, which is ticker symbol WEAT, would surge in price, and that's exactly what we are seeing due to the conflict between Russia and Ukraine, which together make up around 1/3 of the total exports for wheat in the entire world, which means that this particular commodity is going to be harder to come by, thus lowering the overall supply, increasing the demand, which then, according to our macroeconomics education, will increase the overall price for this commodity, thus making wheat futures absolutely skyrocket, which is why I predicted that the WEAT ETF would absolutely explode. If you don't believe me, just watch the video, Huge Stock Market News. If you go to the channel and click on videos, I literally predicted this. But back to Palantir Technologies. It's really nice to see that the PLTR stock is trading below or slightly below their broader software sector. So out of all the software technology stocks that use a SaaS model or a software as a service business model, Palantir Technologies looks to be a great value right now and a good buying opportunity. Not saying that the stock can't continue to fall after this good news, it's just nice to see that analysts are now agreeing that the stock can be undervalued right now. However, ideally, it would be great if you could get Palantir under $9 per share, but we will have to see if that is even plausible. Palantir has a fantastic overall growth rate of around a 30% CAGR, or compounding annual growth rate, specifically for their revenue growth, and this is supposed to last all the way until 2025, and I love reiterating this because this growth rate of 30% is absolutely phenomenal. If you can find a company that has a revenue growth rate above 30% year over year for the next 5 years, that company could be a fantastic investment, especially if it has strong leadership such as Palantir Technologies and they're on their way to profitability. And we'll talk more about their profitability later. I also want to mention that the ongoing conflict and war between Russia and Ukraine, because Russia is invading Ukraine, is causing many investors to liquidate some of their positions. And again, that can be wise, especially if you are trading on margin right now. However, if you're doing something very safe and not trading on margin, this could actually be very beneficial in the long term for software companies like Palantir Technologies. I even made a previous video saying that multiple cybersecurity stocks and companies companies like Palantir and their PLTR stock can start seeing fantastic stock price appreciation from this conflict between Russia and Ukraine, and again, I have successfully predicted that. So it's good to see that the market is actually following our various predictions. However, always keep in mind that our predictions will not always come true. Always remember to hedge your bets and don't overexpose yourself to a single company, because that would be bad risk management. But going to Palantir specifically, Palantir's big data and analytics products are extremely secure and safe, which is why various government agencies, including many military customers, use Palantir technologies because they are so secure. But besides this, their commercial business, which saw a fantastic acceleration in their overall revenues in Q4, which was around a 47% growth rate, is absolutely phenomenal, and I think that this performance in their commercial business is set to continue, especially because of the multitude of companies on the stock market right now are heavily relying on artificial intelligence, and I personally am invested into Palantir Technologies because I deem it as a fantastic AI artificial intelligence play. So this overall is just going to benefit Palantir Technologies even more. But what about Palantir's profitability? I do want to touch on this because I don't think I talk about it enough. Palantir Technologies right now is not a profitable company on a GAAP basis. However, they are profitable on a non-GAAP basis, or their EPS, also known as earnings per share, which is why those can come in positive, but on a GAAP basis, which stands for generally accepted accounting principles basis, they are not positive. And the main reason for this is due to their stock-based compensation program, which allows Palantir to not only gain world-class engineers, but also maintain their current talent so they can produce the best products in their specific industry. The good thing about this is year by year, Palantir is actually lowering their exposure to stock-based compensation, and they're actually making this less and less, which means that even if nothing changes and Palantir Technologies doesn't grow at all, if they start scaling back their stock-based compensation, this will actually force Palantir Technologies to become profitable. Now, I do anticipate that Palantir will continue to grow, mainly because of their 30% CAGR for their revenues until 2025, and then about a 20 to 25% CAGR past 2025. This is going to make Palantir a profitable company between 2024 to 2025, which is absolutely fantastic news. So profitability is coming for this company, and once Palantir becomes profitable, the stock price could absolutely surge. I also want to say that they are also expanding their adjusted operating margins, and that's a reason why many financial reporters are actually estimating Palantir's valuation right now to technically be worth around $21 per share. This could give investors around a 90% upside opportunity in just 12 months, so you are almost doubling your money, which is absolutely insane. If you could actually double your money in the span of just 12 months, that would be fantastic. But overall, Palantir Technologies fundamentally as a company still looks very strong. They are technically trading at a cheaper price than many of their competitors right now, which makes Palantir a better value than other growth stocks in their particular segment, and investors can look forward to Palantir eventually achieving profitability, on top of many more Palantir price target upgrades from very prestigious analysts. So that's all I have for you today on the update for Palantir Technologies. Remember to go and smash that like button for more videos like this one. Subscribe if you are new, comment down below your thoughts about Palantir Technologies, and I will see you in the next YT video.